Hey, it's your man Charlie P. I'm back, man. I got really sick. Like, I was looking rough being sick, so haven't been feeling comfortable being on camera. Like, I went and got a monkeypox test and everything. I was negative, but like I was sick. Like, I was scared, man. But anyway, I'm gonna do things a little bit differently going forward. As you can see, the title and the thumbnail no longer has a dollar amount in it, and that's what I plan to do going forward, because putting dollar amounts in the titles and the thumbnails it was bringing a lot of unwanted attention, and I ain't trying to deal with all that. So I mean, you see what the thumbnail and the title is now. That's pretty much what I'm gonna do going forward. So like, if you know about Forex, then you still have an idea of what kind of profit was made. But just blasting it, like advertising it that way up front, nah, I ain't doing that no more. But yeah, we caught a good Omega trade today. So we're gonna break that down, and I'm showing it to you on my prop firm account. I think specifically the one I showed was my Forex funds. I got it copied over 3 accounts, but I'm pretty sure it was my Forex funds was the account that I actually did this trade on. But even though I use my prop firm accounts, I'm gonna always keep a personal account. And just throwing it out there, I definitely recommend for your personal account needs, go ahead and use Hankotrade. Like, it's a dope broker, guys. I have a link in the description if you should decide to check Hankotrade out. Consider using my link to help support my channel. They got really good customer service. Their payouts are quick. Their spreads are tight, up to 500 to 1 leverage if that's what you choose to do. And you only need $10 to deposit. So definitely a great broker to work with, trade with. Definitely check them out. With that said, let's jump into the video. Okay, so real quick, before I go to bed, I always like to look at the market and just see if it's worth me getting up for London session. I try to see if I spot any patterns currently forming that look like they might confirm that pattern during London session. So right now, yeah, I like what AJ is doing. I've got a line right here. I think that H1 is going to close past this line, or at least M15 will close past this line. Basically, I just need this line to get breached, at least by the M15 candle, but preferably the H1 candle. If that happens, then I will be looking to sell this pair. That's as deep as I'm gonna go into it for right now. We'll come back and see what happens in London session. All right, so we got our close below the line. If I zoom in a little bit, you'll be able to see it better. So as you see, H1 did close below the line. Even easier to see if I just went to M15, because I said we just need at least for M15 to close below it. It didn't happen in the heart of London session, so your boy was up for no reason at all, but it's all right. You know, got a couple hours of sleep, but at this point, since we got our confirmation of the setup that I'm looking for, which I'll go into further detail later, I'm simply waiting on price to come back up and grab my 50 EMA, and we'll sell it. Once it plays out, I'll go into the full strategy in all the details and all that. But yeah, right now we're just waiting to enter this thing. Finally. All right. Let's go ahead and enter that trade. Crap, I got in late. I will. We'll just put our stop loss up there around 20 pips. Give it some room to breathe. I did get a bad entry. Like, I should have waited and got in kind of about where it's at now, I guess. But let's see. As far as a TP area, like I said earlier, I think I said it earlier. If I didn't, know will, but just going down to the H4 chart, this is our next zone pretty much. So that's pretty much where I would target this to come down to. I might end up getting out a little earlier, but just in general, that's pretty much where I'm looking to exit. All right, so quick change of plans. I'm making my TP much less aggressive. Reason being is Friday. The market normally doesn't move as aggressively on Friday. And I like this area because if I draw a fib, that's just below the 61.8 fib level, I can see it coming down that far. Like that's total for today. That would mean that AJ would move 136 pips, which is still a whole lot, versus if I tried to get out down here, that's 185 pips. It's a lot less likely to go that far on a Friday. So let's go for this as our TP, and then we'll call it a day. All right, y'all. So doing a little update. Trade is looking great. As you see, we really didn't have any drawdown. I mean, we were 2 pips away from a perfect entry on this. So definitely a great entry. We're approximately 70 pips into the trade. As you see, we're almost at TP. Knowing my luck, it's probably going to retrace really hard right now instead of coming down and giving me my TP, but it's all good. Let's go ahead and break the trade down in full detail. This setup is what I call an Omega setup. This is my Omega strategy. So let's go over the Omega strategy rules. I'm going to try something a little bit different this time and post the rules one by one on the screen as I discuss them. I'm not going to be reading the rules off my paper, so I may say it a little bit differently than how I post it on here, because I'm posting it after I do this recording. So anyway, let's get into it. The first rule of the Omega strategy is that on the H1 time frame, you want price to be consolidated between the 144 and the 50 EMAs. That's the purple and the gold line. So as you see, we're consolidated between that. Is bouncing back and forth. And it's important to note that price has to at least touch the 144 EMA, which it did. It wicked it here and it closed past it here. So we're good on that. But let's just say, for sake of example, like you see how price was almost at the 144 EMA right here in this area, but it never actually touched it. Well, let's just say it kept doing that same thing, kept getting close to it, but it never actually touched it. That means the setup would not be a valid Omega trade. We need to come in contact with the 144 EMA. The other part of that rule, technically this isn't a requirement, but it's extremely helpful and makes the setup way more probable if it's overbought or oversold. I think in my rules, I say something like OBOS, which just means overbought or oversold. So in this case, we are overbought. If you look down here at the green line, that's my Ehlers Fisher, and it shows it's above the 90 level right here, which means it's overbought. And then we also have divergence, which helps as well, because the Ehlers Fisher shows the momentum of price is going down, versus when we actually draw that same thing on the actual price action, it shows it's going up. So since we have up here, down here, that's divergence. Since it's opposing information, that's another really good sign. But that's essentially rule number one, is which the divergence and all that's not required. It's just, I'm just saying that's extremely helpful. Rule number one in a nutshell is make sure price is consolidated between the 144 and the 50 EMA, and that is coming in contact with the 144 EMA. Rule number two is to make sure that the formation's, I think I said diagonal trajectory, is going the right way. Let me give you a little bit of illustration just to show you what I'm talking about. Now, keep in mind, we're doing a sell right now. So let's just say we had a pattern that looked something like this. All right. In this situation, the diagonal trajectory is going this way, which means we're bouncing, and it's more likely it's going to bounce up. It doesn't have anything to break through, versus, let me erase that, versus if it was like this, now the diagonal trajectory is going this way, it's going up. So now we have something that we can break through, and you want something to break through. All right. That's what I mean when I say the diagonal trajectory is going the right way. So when we go back to the trade, we have 3 key points. I would say this is a key point. I would say this one is a key point, and we can say this one is a key point. Now, I kind of would say forget this one to be, you know what? I'm going to say 2 key points. I'm not going to, because I didn't think about the trade that way. So I'm not fixing to tell you that way. This was my key point that I looked at. That's where I had my line drawn. It's kind of like a prominent point in the market. The reason I'm not counting this one is because it's got a cluster of candles, of 4 candles right there. I don't really like that. I like it to be more of a sharp point. Like this was a sharp point right here. And then this one came down and it was a sharp point right there. So that's why I drew my line here. And actually I'm gonna draw it again. All right. So, but the diagonal trajectory is going the right way, because if you can just imagine, which I don't actually draw a line like that, but we've got a trend line going and it broke. That's really all that says. We need to be able to break a trend line, so to speak. I don't draw them, but the way that I know that it's getting broken is because my points are higher and higher. And so, and then it closed past that point, which is actually the third rule, is make sure that whatever the last prominent point is in the market, which are in the structure, which for me was this right here, you're going to draw a line there, and you need at least for M15 to close past that. So on the M15 time frame, it did close past it early on in the New York session, as we see right here. So that rule is met. Then the fourth rule is once that's happened and you get that close past the your center point, basically, you're going to wait on price to come back up and grab the 50 EMA. The caveat to that is you have to make sure the 50 EMA has not crossed over the 144 on the 15-minute time frame yet. So as you see, when we got in, 50 EMA was still above the 144. Now it's crossed. Well, it's just crossed over now. So had it been crossed over like this, by the time it came up and grabbed it, the trade was invalid at that point. We wouldn't have been able to take it. So, but yeah, you just take the trade when it comes back up and grabs the 50 EMA. So basically you get confirmation. It comes back up and grabs the 50 as long as the 50 EMA hasn't crossed over the 144 yet on 15-minute time frame. And then you take the trade and ball out. That's really it in a nutshell. So that's the full breakdown. At this point, we're just going to wait on it to hit TP. Yeah, we'll be looking good. All right, so back to the trade. We're moving down again now, so we're getting close to TP. At this point, we have about 14 pips left to hit TP. I don't know though, man. I'm kind of getting impatient. I might just go ahead and TP. It's close enough. We just hit 17K in profit. That's plenty for me. I'm good. I tell you what, because that's on this account. Let me go over to this one. Where we at? We got 15K on this one. Tell you what, for the purposes of being able to edit this video, I'm going to take profit on this account. This is a different prop firm. This is the Funded Trader. The other one was my Forex funds that I was just showing. And then I've got it running 10K on FTMO. But where was I? Oh yeah, Funded Trader. I'm gonna go ahead and take this 16 or 15 on Funded Trader and we'll call it a day. Boom. All right. Now profit is taken 16K. How many pips was that? So from here to where we got in, so it was about 75 pips. Yeah, I'd say that's a good day. I'm gonna go ahead and let my Forex funds try to run to hit TP just so I can leave something open. Also, I got FTMO running still. So, but yeah, we're just gonna call that what it is, and I'll holler at y'all on the next one.